Happy Friday, traders. This is Fawad Razak's other market analyst for City Index. Today is the 3rd of October, and we've had the day's main data release, the ISM Services PMI, which didn't really move the forex markets much. The headline figure was bang at 50, which suggests that the services sector is stagnated following a rise to 52 in the previous month. Looking at the detail of the report, you can see that the employment contracted, but at a slower pace in September, improving from 46.5 to 47.2. On top of this, you have prices sub-index rising a little bit faster than the previous month. So that's kind of inflationary, but the employment was not as bad as feared, which taken together means that the ISM Services PMI report was mixed. And as a result of that, we haven't really seen a significant move in the US dollar, which remains on the weaker side of things, thanks to the shutdown in the US, preventing major data releases this week, including the non-farm payrolls report, which obviously will not be released today, but it may come in next week if the government were to reopen. Let's see if that is the case, but the week ahead is otherwise a quieter one for the economic data releases. So that could potentially mean more sideways price action for the FX markets. Now, that being said, we've seen crude oil prices fall. Risk appetite has been strong thanks to the AI rally. And all of that has helped to support foreign currencies against the US dollar. And in particular, the euro is still looking quite strong at 117 to 118 area. It has been consolidating here for a while. Yesterday, it tested support at 117 and it bounced, holding the potential breakout above this bullish flag-like pattern. But all told, it's still in a chop fest, and it will need a fresh driver to push it higher, I reckon. So let's see if that will come in the form of improvement in Eurozone data or further weakness in US data, which seem to be more likely. But in any case, the part of this resistance is to the upside, and I think 120 could potentially be reached in the coming weeks. Key support below 117 is in the shaded region where we have a bullish trend line converging. And resistance in the short-term outlook is this high from the summer at 118.30. Above that, the high that was hit in September at 119.18 comes into focus. And then above that, you don't have anything significant until the 120 handle. Now, today we've seen a fresh record high for the S&P 500, and the Nasdaq is also pushing higher thanks to technology stocks outperforming. But the small cap index of 2,000 US companies, the Russell, is also looking quite strong. It has been pushing higher in recent weeks, creating higher highs and higher lows. And it's taken out this key area of resistance, the double top from 2021 and 2024. This area was resistance. We tested this area a few weeks ago, where the market formed a temporary top, but support held at this shaded blue area of around 2,400, and that has led to a renewed bounce, which is now seeing the index poke its head above that area of resistance I mentioned, between 2,461 to 2,468. So this is a potentially bullish sign if it can hold the breakout into the close. And from here, it is likely to probe liquidity above this recent high of 2,491, and which is being tested at the time of this recording. So the path of each resistance is clearly to the upside, and I think this is an index to keep an eye on because it had been underperforming until recently, and now it could be joining the likes of the S&P and the Nasdaq and making more significant gains. For more market updates and insights, make sure to check out the news and analysis section at cityindex.com. I'll see you in the next video. Take care.